Hey everyone, welcome in to another daily editorial here on the KE Report. Corey and Chad here chatting with Kenton Ralph Toews, founder of Youixa Crypto. As it says in crypto, we are chatting more Bitcoin here because, well, we have the Bitcoin ETFs, 10 or 11, depending on how you want to classify them, approved for ETF status. And on the back of that news, we've actually seen Bitcoin move down in price. Now, we should say that, look, Bitcoin has been on quite the run all through really last year. And at the start of this year, it started to get a little choppier in trading. A couple days before even the ETFs were approved, we had a fake tweet that actually drove prices even higher, but that is more or less, at least in the short term, marked a top in the Bitcoin price. Now Bitcoin right around that 40,000 level. Kenton, I need to ask you, what's going on with the Bitcoin price after the ETFs have been approved with the pressure to the price?
Hi, Corey. Hi, Shad. Thanks for having me. I think it's just a simple buy the rumor, sell the news. There's a lot of hype going into into these ETFs being approved, and now it's done. Hype's over. People had basically a full year to buy Bitcoin on the cheap, and they did, and they got the news they're looking for, and they sold. They made a profit. I think it's that simple. I don't think there's any more to kind of look into it. Even if you just ignore the whole ETF narrative and you just look at the charts, Bitcoin's been kind of going straight up for a year now, just kind of due for a pullback. Especially the last couple months, it's been going straight up, just due for a pullback. So I think we're just seeing some profit taking is all.
Well, Kenton, we were talking off mic a little before this about there were some articles circulating in the financial media talking about certain funds wanting to get out of the Grayscale Bitcoin Trust, which is now an ETF, but rotate into some of these other ETFs. There were some big outflows out of this Grayscale Bitcoin Trust, the GBTC, but you had a different take on some prior trades people had put on playing the arbitrage between Bitcoin and the Grayscale Bitcoin Trust, and why some people wanted to have an escape hatch, and then yeah, they maybe rotated into some of these other ETFs. Maybe break that down because there's been a lot of speculation around that in the marketplace.
Sure. So one of the arguments for people leaving GBDC and going to the other new ETFs is the fees. Grayscale left their management fee went from 2% down to 1.5%, whereas all the other ETFs, their management fee is like zero point 0.2, zero point 0.3, zero point 0.5, like it's really low. They're really competing with each other on fees. And institutional investors, they're sensitive on fees. So that's fair if you want, we're all trying to save money, right? You want a cheaper product. But if you've been in GBTC for a while and you're selling to go to an ETF, well, you have to factor in your capital gains. You have to pay capital gains tax on that sale. And if you are, it doesn't make sense to try and save 1% a year in management fees if you got to pay 15% capital gains tax. If somebody is underwater on the trade, if they're sitting in a capital loss, all right, sure, then it makes sense, right? Sell, capture loss, move to the other vehicle. I don't know. I just find it hard to believe that they're just, people are just switching for fees like that. But hey, it could be, right? I mean, humans aren't always rational. And the other thing is, let's talk about, why is the price down? A lot of people are saying, okay, it's because there's net outflows out of the GBTC. And, there's net selling on these ETFs. And, why is there net selling, right? If this is a positive news event. Well, some people have been stuck in GBTC for a long time and their shares are trading at a huge discount to NAV. It got to as low as 50% a year ago. And only today are they at par. So if you bought into GBDC 2 years ago through a private placement, your shares are locked up for 6 months to a year. You did it because those shares are trading at a premium at the time, so you thought you're buying something on sale. Then when your shares come liquid and able to trade, now they're trading at a discount. You might not be inclined to sell. You want to hold on and wait for it to go back to par. And that's where we're at right now today with GBTC. The shares are back to par. So it could just be simply people looking to, exit their trade. They might not be Bitcoiners per se, but they some mispricing in the market, taking advantage of it. And then also, if you peel back that onion a bit more, remember this whole GBTC premium and discount mess is what blew up the crypto market a year and a half ago. It's why Three Arrows Capital, 3AC, why it imploded, BlockFi, is because these funds were leveraging that trade. They're borrowing money to buy into the GBTC shares, buy them at par, hold on for 6 months to a year, and they became free trading and sell them at a discount. And while they're doing that, they would short the Bitcoin price to help, balance out the trade. Well, when GBTC started trading at a discount, that all just kind of blew up in their face, and the carrying cost of keeping that going was just mounting and mounting. And so maybe we have some funds who actually carried that trade all the way up until now, and they're like, trying to get out, trying to break even. So I think that plays more into why people are selling GBTC right now, as opposed to just trading it for the BlackRock ETF. I think there's more going on behind the scenes that we're aware of these other investors, what they were doing, the GBTC.
So what about larger institutional money? We are hearing that with ETFs, that would free up this pool of capital, larger capital from institutions that have more comfort and even have policies where they could invest in ETFs. Is that money going to come into the sector?
I think so, but you got to give it time, right? It's only been what, 10 days?
Yeah, but we were
To
hearing
12
about
days?
these ETFs. Like that, if they were going to come in, shouldn't some of them have been ready to come in right away?
Yeah, and I think they are. Here's a tweet from Belachunas. I'm gonna kind of paraphrase here. But within the first 3 days of the Bitcoin ETFs launching, there's 10 billion in volume. If you look at 2023, that whole year there were 500 new ETFs, and those 500 new ETFs, they traded 450 million in those same 3 days as the Bitcoin ETFs. So let's rephrase that. Within the first 3 days of the Bitcoin ETFs being launched, we had 20 times more volume than the 500 previous whatever random ETFs that were created. So they are trading it. People are, they are getting involved. If you add up all the Bitcoin ETFs, you got about 28 billion in AUM. If you add up all the silver ETFs, we're at about 11 billion AUM. So the Bitcoin ETFs are already the second largest commodity ETF in the world. The first obviously being gold. And they have about 93 billion in AUM between all those ETFs. I think just give it time. It's, when I was working at Sprott, whenever we had a deal I know was coming through or working on, I wouldn't go necessarily, well, for one, I couldn't tell clients about it. But if some deals I were able to talk about, I still wouldn't unless I knew they were for sure being done. And there's nothing worse than telling a client you have something for them and then it doesn't come through or it takes 6 months. So with all these ETFs kept getting delayed and whatever, nobody really truly knew when they were going to get approved. And so the sales team, the sales force might just be waiting. Let's just wait till it's actually approved, and then we can get out there and start hitting on the phones. So now that they're approved, there's something to sell, and there's something that people can buy right away. So I say just give it time. Let's give it a year. Let's talk about it in a year and see what it looks like. But I'm inclined to believe that total AUM Bitcoin ETFs will surpass the gold ETFs at some point. I think that's entirely plausible. Yeah, it'll just take time.
Well, Ken, let's also talk about the wild roller coaster that always is the crypto miners in reaction to this, because when we saw that big spike in Bitcoin, of course, we saw kind of a delay as Bitcoin was trucking higher. Finally, the crypto miners took off, and then they went bananas like they always do. But they've really sold down hard, and some of them are selling down harder than they were before all of the big run in Bitcoin. And Bitcoin hasn't sold off that much. So, what do you make of the environment with the crypto miners right now and the way they're trading?
They're the leverage play on Bitcoin, right? If Bitcoin goes down, they're going to go down more. If Bitcoin goes up, they're going to go up more. We touched on earlier about people selling GBTC to go to these other ETFs. That could be happening in the miners. Again, it wouldn't make sense if they're sitting on a capital gain, to pay taxes just to get out of that to go to the miners. But maybe it does a little bit. If people were just buying the miners as their Bitcoin exposure and they don't like the volatility or the leverage, and they'd rather the stability of an ETF, in relative terms. So that could be happening. I'm not talking to anybody who's selling the miners or trading them, so I'm guessing as much as anyone else. I don't have a good insight there on what people are thinking or doing there.
Yeah, just judging by, again, kind of the overall volume, very interesting in these ETFs. And then the miners, as you said, they are usually just a leverage play here. So, Kenton, big picture, these ETFs, now that they are approved, even with how long it took for them to be approved, what does this change in the overall crypto sector in your eyes?
So, just like you touched on before, this opens a way for people to get exposure and buy Bitcoin that they didn't have before. A lot of institutional investors and even regular brokerage firms, they have restrictions on what they're allowed to buy. With these ETFs trading on the New York Stock Exchange, they can buy those now. And then also too, there's the whole, a lot of people just have that mental hurdle of buying Bitcoin in the first place. Opening an account at Coinbase is just the inertia to do that, or the people are just lazy, right? They don't want to figure it out, even though it's not hard. It's really easy, but they already have a brokerage account. They already have access to New York Stock Exchange. They know how to trade in their account. Now they can go buy it. Now it's easier for people to get exposure to Bitcoin, and it opens the door to a much bigger audience. And so I think again, it'll just take time for those people to trickle in. Now, something I keep forgetting to say though, just because I'm hot on ETFs, I think it's great for the Bitcoin price. I think it's great for the industry. I don't think people should buy them. I think buying Bitcoin and taking self custody is the way to go. If you have a retirement account or you're just not going to learn self custody, fine. The ETFs are better than nothing. It's no different than gold, right? I mean, the best way to buy gold is take delivery. If you really can't for whatever reason, then fine. The ETFs are the second option. But definitely, if someone out there is listening and thinking about getting into Bitcoin, definitely encourage them to try and learn self custody. It's not that hard. But if you're gonna go to an ETF, there's 11 of them out there. Which one you should look at? And in my opinion, I think the Fidelity one is the one to consider because they themselves are doing self custody. They're the custodian of the Bitcoin in that ETF. All the other ETFs are using Coinbase as the custodian. And so if something bad ever happens to Coinbase, they in effect will take down all of those other ETFs, right? Coinbase hopefully it doesn't happen, and they've been around for a long time. I expect them to continue to be around for a long time. They're pro crypto. They're doing what they can to move the industry forward. They're good actors in the space. But if you're just looking for to be contrarian, not follow the crowd type thing, and not get roped up into all these other ETFs are using the same custodian. I don't know. I don't know what could go wrong. I'm just saying, maybe there could be something. Whereas with Fidelity being separate, they're on the side, they're doing their own thing. They've been for asset management firm, they've been pro crypto for a long time too. They actually are one of the OGs in the space, which I think is great. And in a sense, they're doing self custody, right? They're custodying their own ETF. And so maybe in that sense, maybe they're a bit safer.
Yeah, fair enough. It's an interesting story to see the ETFs being approved. And as you said, it's still very, very early on. Who knows what sort of big players are going to get positioned, which ones already were positioned, and where money is rotating. But it definitely gives us a lot more to talk about this year now that we have this whole will it, won't it be approved narrative around the ETFs. Now that they are approved, let's see where these ETFs go, just simply in market size as well. Kenton, thank you very much for your time. We'll chat again probably early on next month just to follow along with now some of the changes in the crypto space. Hope you have a great rest of your week there, Kenton.
Thank you. You too, Corey.